Hi, it's Lee and welcome to the Tesla Economist. Tesla's down over 5% and closed slightly below $260. Obviously a reasonable drop compared to how the stock has been performing as of lately, with the market trying to judge where Tesla's stock price should actually be during these times. It's conflicted with so many tech stocks around their 52-week highs and Nvidia sitting around its all-time high and trying to work out whether Tesla should also have a similar recovery. With more and more evidence of Tesla leading the way so far ahead when it comes to EVs and FSD, and if EVs are to become the future, then it's Tesla's world and everyone else will be paying rent. The stock was actually up about 1.5% pre-market too, getting very close to $280. Of course, the stock got hit today with Jerome Powell letting us know that inflation still needs to come down to the Fed's target, as price stability is the main mandate of the Fed, and too much inflation disrupts a stable economy. So we may need to expect more rate increases to come still. However, the Fed is going to assess the economic activity first to see how necessary it might be. This may just be a scare tactic to cool down the markets, as we also don't know just how much power the Fed actually have before rates become too high and not even the government can afford their payments on their national debt without having to borrow more money, rinse and repeat. Now, with Tesla selling products that are in the auto industry, higher rates mean higher prices for vehicles, and thus lower demand, which would mean lower prices, lower margins, etc. We also have Dan Levy from Barclays cutting his price targets from 260 to 220. He admits that it's because he focused more on the existing car business compared to the AI opportunity for Tesla. Again, the whole conjecture of whether Tesla is an AI company or car company. He thinks investors are disregarding fundamentals. However, the fact that Tesla are building a new factory in Mexico, and now rumours of a new factory in India potentially, if not somewhere else, shows there is a lot of growth still to come just in the next few years for the auto side of the business, with Elon suggesting 5 million sales a year from the two new Gen 3 models. Then energy growing too. So it can be argued that the fundamentals are on the way for the auto business. Well, this is a tough time for the auto industry. With rates this high, the Fed are attempting to correct inflation, so that inevitably over time rates will reduce and the auto market will return to normality. It may however be another year or so until that occurs, or even longer, and when it does, Tesla may be able to raise prices again somewhat, and the margins will improve again. Meanwhile, Tesla's production is also increasing, whilst OPEX remains fairly stable, so operating margins should increase to levels we saw before, except with much higher turnover. Anyway, this is investing, and this is investing in Tesla. The stock price is going to move from event to event. If this is all the macros can affect Tesla right now, with news of potential rate hikes, then it's still holding relatively well. There's so much anticipation of positive Tesla events on the way that Tesla's stock price could continue to run anyway. Just look at the chart from the last month, up 40%. The Fed and macros being the biggest concern that most investors thought could stop this run. Even if the run stops though, it feels like the stock price can hold for now. Investors believe in Tesla again, having seen so much further ahead Tesla is than the competition, and the competition realizing that if they don't join Tesla, they'll be left for dust. Kind of like a buggy company having to team up with a company that makes internal combustion engines, realizing that horses are not the future of transport. Although Jim Farley from Ford is saying that the Cybertruck is just some high-end product, targeted at Silicon Valley, rather than a truck for real working people, saying that Ford make trucks for real people who do real work. To be honest, it looks like a lot of thought did go into the F-150 Lightning. They know their market and cater to it, whereas Tesla is just creating a whole new market. Ironically, the phrase from Henry Ford seems apt, that if he asked his customers what they wanted, they would have said a faster horse. Look at the waiting list for the Cybertruck. Look at how much interest and exposure any spy photo generates. Listen to how much people love talking about the truck, the ideas and potential it may have, the applications, the specifications. Make no mistake, this is one highly coveted product. It feels like demand is strong, and this is for the US pickup truck market, which is huge, and there's nothing close to it. However, I would guess that there is a possibility that the majority of reservation holders have never had a pickup truck before. That is just a guess, but all the people I know who've ordered one never have. The vehicle is attracting new consumers to this market segment because it's far more than a pickup truck. It's a Cybertruck. And we've seen how the Model 3 and Y have beaten out all the competition in their segments. So is there a possibility the Cybertruck might do the same, especially given its popularity already, without even being in production yet? Could it beat the F-150 pickup truck and reach 1 million sales a year? I don't know. Perhaps that seems unlikely. But the point is, there is plenty of demand for pickup trucks, and all the current ones in the market look just about identical, and all do the same things, aside from the F-150 Lightning and Rivian. But the Cybertruck takes that to the next level again. I expect this product to give more momentum to the stock price when it finally commences delivery. Add to that more confidence from the market that AI is going to be life-changing and will replace a lot of jobs. One clear job Tesla's AI will replace is obviously drivers, and that is where the robotaxi potential lies. But just the sheer convenience of having a car drive itself is also a huge opportunity. AI is only going to improve, and by association, so will belief in Tesla's AI capabilities. Elon now talking about a huge FSD update that will be 11.420, of course. Now, whether this is a bluff from the Fed or something they are going to follow through with, we have yet to find out, and will likely depend on how they see inflation over the next few months perhaps. There is a lagging effect from the economic impact of what they have already done, and Elon says that he is already seeing deflation. I don't think the market has even finished its bull run from 2021. With all the global government spending, the central banks may have put their brakes on, but unless there is a financial crisis to rearrange the system and money, then the market is ready to see the rest of this bull run eventually. There's still plenty of exuberance remaining. When it comes down to it all, it's a lot to do with sentiment right now. The sentiment for Tesla was feeling good. Old memories are flooding back of how truly world-changing this company will be, along with a determined CEO who will do whatever it takes. We just got a quick reminder that there are other factors in the market other than just a company looking to thrive and change the future. The market may just look past this latest threat from the Fed and keep going. Of course, if the market calls the Fed's bluff, then it will be more likely the Fed actually see it through. I guess we'll have to wait and see. Hi there, I'm using Verbalate AI video translation and lip sync software. It's pretty amazing. Watch this.
I can translate my videos into other languages. For example, I am now speaking Hindi.
नमस्ते, मैं पहली बार हिंदी में बोल रहा हूँ, लेकिन वर्बलेट इसे इतना आसान बना देता है.
Or how about Spanish?
Hola, vaya, increíble.
También puedo hablar español.
Sign up at verbalate.ai today to gain early access to trial the product for creators and strategic partners, and gain the ability to translate and lip sync videos in all major languages. You can view the info in the description below.